special shout out to our sponsor, Qualia. Qualia is the category-creating digital closing platform used by thousands of lenders across the country to seamlessly work with their title and escrow partners. By working better together, Qualia is powering lenders to deliver a differentiated closing experience for their clients. Through real-time communications, closing status updates, and workflow management, Qualia brings lenders together with home buyers and sellers, title and escrow agents, and real estate agents for a secure and seamless closing experience. Qualia is proud to have been awarded the Housing Wire Tech 100 Award for real estate, as well as CB Insights FinTech 250 Award. Discover how you can work more efficiently with your title and escrow partners at qualia.com/innovators. That's QUALIA.com/innovators.
Greetings, everyone. If this is your first time joining us, welcome to the Mortgage Innovators podcast, where we deliver fresh and hopefully fun and entertaining insights on all things mortgage and the innovation propelling our industry forward. My name is Margaret Chiavini, and this week's episode is another insightful tech talk. It's a segment from last year's Mortgage Innovators Conference, where ICE Mortgage Technologies' Nancy Alley discusses all things eClosing, specifically the trends and the issues. Before we get into that, we want to make sure that all of you know that the Mortgage Innovators Conference 2022, which is the power of innovation, is back in person. And it is going to be an experience that you definitely don't want to miss. We can't wait for you to be there. It's May 2nd through the 4th, 2022 at the Anaheim Hilton. Registration is now live, and information about sponsorship opportunities can be found at mortgageinnovators.com/conference. That's mortgageinnovators.com/conference. So be sure to check it out, be sure to register, and now on to our Tech Talk.
My name is Tiffany Bjarnson, and I am the Simplifile eClose product manager for ICE Mortgage Technology. And joining me is Nancy Alley, who is VP of Strategy for eClose Strategy for ICE Mortgage Technology. Today, we're going to cover three key areas in our Tech Talk about eClosing in the industry today. First, we want to discuss industry trends. Second, we want to share our vision towards providing a true end-to-end eClose solution. And last, we'll discuss some best practices to address the challenges lenders are facing with technology. Okay, Nancy, so let's start with our first topic. Based on your experience, what you're seeing, there's some interesting data out there. What are your insights on where the industry is with eClose technology?
Yeah, well, thanks, Tiff. I mean, wow, there is a lot going on right now. So it's hard to boil it down just to a few things, but I'll kind of throw out my top ones. One is demand for eClose is higher than ever. I don't think that's a surprise to anyone, especially given the pandemic and people trying to get to a socially distant closing. So I don't need to spend a lot of time on that other than to just affirm that that's going on in the marketplace. But demand is high, but people are really still struggling with adoption. So that would be probably my first trend that I would want to talk about. I don't know if you saw it, but Stratmore recently put out a study or some data out there, and I thought it was super interesting. I've talked about this a little bit before because it was so compelling to me. One starts on a good note. We have that by 2020, over 40% of lenders had gotten some type of hybrid eClose technology, and that's a huge jump. If you looked at that number back in 2017, we were at about 8%. So 8% to 40, definitely going in the right direction. However, when you look at those lenders, only 12% had achieved 75% adoption. So that's a big red flag, because really with hybrid, most lenders can get well in the 90% of their loans eligible for hybrid. So then when you drill down in the data a little more, one other thing that popped out to me from the Stratmore data was that where's the bottleneck? Who's not adopting, right? And it was interesting because it was actually in the lender shop. And the number was abysmal. It was about 30% of the users in a lender shop were adopting. It's not, people like to say, well, the borrower's not ready, or a lot of times we hear, they blame it on settlement, doesn't want to do an eClose loan. It's really starting at home. And then another measurement that they did was around what are your key headwinds? And one that had jumped from lower in the list in previous studies to the top was really around IT resources, implementation resources. So I've got a little graphic here that kind of shows the eClose ecosystem. And I think when you take that data and you look at this graphic, it makes a lot of sense. So here you can see when you go into doing eClose as a lender, one, you need a data system, right? You need a loan origination system. Lenders have that, so that one we can check. But then you need electronic docs. You need those docs ready to e-sign. You need collaboration with your settlement agent. So if you think about coordinating an e-closing, you need a way, ideally, to digitally coordinate that with the settlement agent. If you're getting into notary docs, you need e-notary technology. If you're getting into e-notes, then there's even more that goes on. You need an integration to the MERS registry, which would typically be done through an e-vault that you also need. And then post-closing, hopefully your e-recording. So what you see there is there's a lot of systems interplaying and pulling off e-closing. There's a lot of inputs, and typically this means that there's a lot of vendors in the solution. And we don't see in the marketplace where most vendors can do it all, so they're either partnering or lenders are required to work with multiple vendors to kind of pull off this eClose vision. So all this, like I said, I think makes sense when you look at the data, because now you're asking IT resources and implementation. That was a challenge in that study. Well, if you've got to put all these moving parts together, that makes sense. When you see all these different systems, it means users have to learn new systems, and that's probably causing some of the lender user resistance. They just want to stay where they're comfortable working and not have to learn all these new things. I think on top of that, we've had record volume, obviously, in 2020. Volume still stays very strong in 2021. We had a major compliance change with IRLA, and you've got all that going on, and that's when change is hard. And it's kind of funny because we think digital makes us faster, but the tendency is to go back to what we know, which is paper, when you've got a lot going on right now. So I think all of those things are feeding in. So that'd be one big takeaway. My other big top trend that is really good news and I'm super excited about is e-notes are finally a thing. I feel like I've been waiting this forever, but just wanted to share a few things. Again, the pandemic is helping with this, but COVID doesn't get all the credit here. One big milestone is earlier this year, we hit over 1 million e-notes registered ever to date on the MERS registry. So that was a super big milestone for us, and we were really excited about that. But there's other things other than the pandemic kind of spurring on this movement. And the two things I'd like to talk about is Ginnie Mae and the Federal Home Loan Bank. So what's going on with Ginnie Mae? Well, last summer of 2020, Ginnie Mae launched their digital collateral program. And in January of this year, Ginnie Mae issued the first mortgage-backed security that consisted solely of e-notes. So that's another big, huge milestone. I think what's important about Ginnie Mae coming on board is it really expands e-note acceptance. We've had lenders that have been playing in eClose, but maybe 40% of their business is government, FHA, VA. And so they had to hold back on how big they could go. By putting government loans into play for eClose, it's really going to help drive adoption. And then the last piece is the Federal Home Loan Banks, which I don't think we probably talk about a lot, but this is a really interesting development. So last summer, it was Chicago, Dallas, and Des Moines that started accepting e-notes as collateral. And we've got several more integrating now to accept e-notes. And this creates basically a path for e-note adoption for the almost 7,000 members of the Federal Home Loan Bank system. So, that's another kind of groundswell we can have coming up to drive adoption. So how do I see e-note adoption going? I still think it'll be a little lumpy. You have a big lender come on, it might really spike the adoption in bigger increments. But things like the Federal Home Loan Banks, which just can create kind of this foundational groundswell to help us grow adoption, I think is really important. So those are the two big trends I wanted to share today.
Okay, so basically you're saying no one's been busy, no one's been doing anything.
Nope, no one's been doing anything.
Okay, well that leads us right into how ICE Mortgage Technology views eClosing. So specifically, given that now that we're one organization within Compass, SimpleFile, MERS working together, what would you say is the ICE mortgage technology approach, specifically with your vision around strategy to meet the needs that the lenders have?
Yeah, I think it kind of goes back to what I was just talking about, is that we see that there's demand, but then we're having adoption pain points, right? So our vision, if I were to put it very simply, is to keep it simple to adopt. And I talk about this, and others may have heard me say this, about having one partner, one workflow, one source, and one network. And let me break down what that means to me, and why I think it feeds into our vision of let's keep it simple for people to adopt, right? So ICE Mortgage technology really has all the pieces that I showed you on that slide to really drive the promise of a digital mortgage. And so when you can get that from one provider or one partner, it simplifies a lot of things. When we talked about maybe having resources to do multiple implementations, it's one contract, it's one price, it's being able to kind of control your destiny that way. It's also a consistent borrower experience. I showed you all those different systems on that slide, and you want your borrower to basically be able to live in one place. And that's when you have one partner providing all the pieces, I think you can accomplish that. The next is one workflow. And I talked about lender users being adoption blockers. And I think for a lot of people that was surprising. I have seen it firsthand, so it wasn't quite as surprising to me. But this is change, right? And I think one of the things you want to look for in a solution, and part of our vision, is keep the users working where they're comfortable and have basically one workflow. So from all the way from doc draw to an investor delivery, for instance, in our solution, all that can be done in Encompass. So that's a system they work in every day that helps reduce adoption friction. But it's not just about being in the one system, it's about treating loans alike. So whether I'm drawing a closing package for 100% ink loan, let's say it's a loan that's not eligible for eClose, or I'm drawing a RON package for every single thing, the workflow should be similar for the users. So they're just thinking about, I'm drawing docs to close a loan, not is this RON, does this have a NINO, and keeping it really simple. Then I talk about one source. And this is something I feel like people don't talk about enough, because we look at eClose and we say, oh, it's about e-signing docs and it's very doc-centric. But there's data that produces those docs. There's data that needs to be shared between lender and settlement to pull off, an e-closing. And by having it through one provider in one system, you're able to trust the data. And when you can trust the data, then you start driving operational efficiencies. Like, you're not trying to reconcile that data between two systems. You don't have to rekey it. You don't have to do the same level of quality control on it. And so I think that's an important but often overlooked part of the vision. And then last is one network. So under ICE Mortgage technology, we now offer the largest ecosystem of lenders, settlement agents, counties, servicers, investors, all together in one place. And you may say, well, what does that have to do with eClosing technology? But it really does, because you can have the best technology, but you need users in place ready to use it. And that's about having a network that's enabled. And if you have a network that's enabled on the technology, what that does is, if I'm a lender, I can scale. If I'm ready to just hit hybrid, let's say, and go 90% of my loans are going to go hybrid, I have the network to do that. I'm not in this, training and education phase. Does that make sense?
Yeah, it does. And something you touched on a couple of times is that this is more than just being able to use technology to electronically e-sign. And I think that's huge. So where are the gaps? What would you say are the best practices that lenders should consider in their eClose journey when they're starting hybrid or moving to full eClose or later on?
Yeah, so I think there's basically 5 things that you have to look at, whether you're starting with hybrid or you're trying to do the Holy Grail all at once, right? I think there's kind of 5 things. And this, you hit it on in your question. I don't look at this as an IT project. I don't look at this as just a new software implementation and, everyone's just got to get on board. I really look at this as change management. And so these 5 things I'm going to mention, I think, apply to most change projects. But we see that they're critically important when adopting eClose. First, it has to be, you have to have executive sponsorship at the leadership team of your organization. You need to basically embrace why we're doing this, quite frankly, you need to mandate it because you got to deal with the user issue. But users have to understand why. Why is it good for your lender organization to do eClose? Why are we doing this? Hopefully not to be cool. We're doing it because it's going to help the business and help our customers. And then a common mistake is we say we're going to do it, but we don't define success. So at the highest levels of your organization, you need to set goals. What is it? Do you want to be 90%? Do you want to do, 25,000 e-notes over the next X period of months? What is the goal? What does success look like for you? So that's number one. From that, now that you've kind of told the organization that you're going to do this, and this is why you're going to do it, and this is why we should be excited about that, you got to build a project team. And again, this is not an IT project. You need operational stakeholders involved in this project team. You also need external stakeholders, the most obvious one here being settlement, to be involved, because this is about changing your workflow. This is not just about new software. And this is a place where I think you can tie also number one to number two. Your project team should be meeting on a regular basis to pull this off and get all the stakeholder input and to develop a plan. And if you have your executive sponsors spontaneously drop in their meetings, it just helps reiterate that at the very highest levels of the organization, this is important. And then we get into something that I think is probably obvious, but we also see people fall down on, is testing. You have to have a robust test plan. And the whole project team needs to be involved. It's not whether the software works, it's whether it works for the loans you're originating and trying to close. And testing that, again, you want to do round trip testing. You want to involve your settlement agents in the process, so you really have robust knowledge that when this gets into the live world, this is going to work. And then number four is something I call driving readiness and adoption. I've used the A word, the adoption word, several times today. And think about this step is, okay, now we're pretty far in our project, but we need to be able to communicate, and communication is the key here. So I like to say people know what to expect, what's going to be different in my job, and what's expected. Is this an option, or am I expected to do this? If I'm a settlement agent and I don't want to eClose Mr. Lender your loan, what's going to happen to me or our business? So you need to communicate not only internally, but again to your agents. This is also where your frontline production people also need to know what to expect and what's expected of them. And then you need to also be able to have a plan and training for your borrowers on what is this eClose option and what does it mean. That all of that makes it easier for everyone to adopt. And then last, I have celebrate but measure. And I know the but seems like a negative, but celebrating the success that the program goes live is awesome, but this is probably the number one place I see lenders fall down. They stop there. They say, oh, we've gone live, that's great, check the box, it was on our 2021 plan. But really, this is where you're gonna tie number 5 to number 1. You set goals, you need to be measuring against those goals, you need to be broadly communicating how the organization is doing against those goals. You said it was important, so are we doing well to measure up against that? And then at a more granular level, you need to look at user adoption and where users are struggling. You need to touch base with them. You need to understand why they're struggling with this change and take that feedback back so that you can continually improve the process. So hopefully that makes sense, but those are the 5 that I go through in my mind when I'm working with lenders on how they get eClose to be a success.
Thank you. I think that was great, Nancy. I couldn't agree with you more. We just want to thank you again for letting us join the Mortgage Innovators Conference. Hopefully this tech talk gave you some interesting things to talk about with best practices. Take care, and we hope to talk to you again soon.
Thank you for listening to today's episode. If you like what you heard, please be sure to subscribe to the Mortgage Innovators YouTube channel or wherever you podcast. Until next time.